Hi guys. So the next topic we're going to look at, so we've looked at money, we've looked at banking. The third topic is stock markets, okay? Quite a short little topic, and we're going to have a quick chat about those today, okay? So what I want you to do first off is open up the workbook pages. This is view only, that's deliberate, because what I want you to do, as it says at the top of the page, is to copy and paste this onto the workbook pages that I gave you last lesson. Otherwise, you're going to end up with lots and lots and lots of separate Google Docs, which is going to be a nightmare to keep track of. So from now on, all the new pages, I want you to just copy and paste into that first one I gave you whenever your first lesson was, okay? So it's real simple, just select down, it's only a couple of pages here today, and copy and paste that straight into your document, and hopefully the formatting will stay the same, and that'll be nice and smooth. Let me know if it's not, drop a comment or send me an email, and we can look at a different way of doing this, but hopefully this will be okay. So it's going to be quite a short video today, quite a short chapter as well, okay? It might not even take the full 50 minutes, so you can just make sure you finished off money and banking from the previous lesson. Sorry, Mr. Latson just walked past playing guitar. So we're going to look at stock markets today. Get back on track. So we're going to look at stock markets today. So some of you, if you do business studies, will already know about this. Businesses are usually two main business structures. There can be what's called private limited companies or public limited companies. There are partnerships and sole traders, but to be honest, there's so few of those that they're not really something that we need to concentrate on right now, okay? So, as it says here, private limited companies are companies that are owned by shareholders. So if you're a shareholder, that means that you are a partial owner of a business. You own a share, which is a small proportion of a business, okay? The thing about private limited companies is that they are private. So the shares are sold to people that the original entrepreneur that started the business knows, okay? So if you're a shareholder, you can invite people, workers, colleagues, friends, peers, investors to be shareholders in your business, but they are traded person to person. Okay, so they're not on stock markets, they're not on stock exchanges, they're a private limited company. Okay, so as it says here, the shares of the company are not traded with strangers, with members of the public. Okay, so these are quite small businesses. They can grow quite big. I believe Dyson is still a private limited company. Can't think of any more off the top of my head. I think John Lewis, the department store in the UK, is a private limited company. But they're usually small to medium-sized businesses. And by that, I mean sort of 1 to 250 workers. So SMEs, small to medium-sized enterprises. Okay? What we're talking about is PLCs, or public limited companies, okay? So these are large businesses that have reached a size where they could apply to be on stock markets, okay? So they do an application, they have their business audited, go away Siri, they have their business audited, their business is valued, and then they go on the stock market. And that could be the New York Stock Exchange, it could be the Hong Kong Stock Exchange, the London Stock Exchange, it could be the Dow Jones, it could be any number of stock exchanges. It's whichever they choose to list on, okay? So when a company becomes public, they sell their shares to anybody, to strangers, then there's what's called an IPO, an initial public offering. And this is the day that people like you and me can go and invest in businesses. So you can go online, you can use a bank like HSBC, or you can use a stockbroking service and invest in public limited companies. Okay, so you can go on, you can find the business online, it'll tell you how much a share is. So a share in Cathay might be $300, and you can invest and buy shares in those businesses, okay? So Facebook, as you can see on this graph here, their initial IPO was in May 18th, 2020, and then you can see what happened to their share price over time. Okay, so you can have a look, this blue line, so 0 is the price that it started at, and then you can see the events and what happened to the share price over time. And then obviously at the end here, the share price doubled because it's 94% of the IPO offering. So in this period of time, which on our graph is 3 years, the share price doubled. So if you bought those shares, you would have doubled your shares. You would have doubled your investment in those 3 years. So that would have been a good investment. You can see Twitter here. That went live in November 7th, 2013, and again, turbulent and didn't really recover. So it peaked at an all-time high shortly after and then has been lower since. So have a read through this graph, and then we've got two questions. So what happened to the price of Twitter and Facebook in the 6 months following their IPOs, their initial public offerings, and what factors are influencing the price of Facebook and Twitter shares? Okay, so pause the video there and have a think, have a look at this graph, spend a bit of time, a minute or two, looking at the graph and answering these two questions. Okay, so now we've got a second graph here, which shows us the S&P 500. You may have heard of the S&P 500. It's the Standard & Poor's 500, which is an index of the 500 large firms in America. Okay, so they take an index number and look at 500 firms and have a look, is their share price going up, is their share price going down, and it kind of works out an average of whether the average share price of these 500 businesses has gone up or down over time. Okay, and it's a really important measure. It's one of the key measures of the American economy, and because it includes 500 really large companies in America, then it gives an indication of the strength of the US economy. So we can see here, we've got the last 5 years. So again, have a look at this graph. What do you notice about its overall trend? What do you notice as the trend is changing? So what does this graph tell you about the S&P 500 over time? And why do you think the S&P index has risen in the 5 years? So it was at 2,000 in 2015, and now it's over 3,000 in 2020. Why could that have happened? Okay, think of what it actually is representing. The share value, so the value of the 500 largest firms in America. Okay? So just pause there and have a look at these two boxes. Okay, so that was just a little warm-up task, and having a look at stock markets and some of the key things you need to know about stock exchanges, stock markets, the same thing. Stock exchange and a stock market is the same thing, interchangeable. So a stock market is just the definition is just a market where the shares of public limited companies are traded. That's all it is. So it's where these tiny little parts of businesses, which we call shares, because you take the whole business, slice it up, just like a cake or a pizza, into tiny little slices, and then you sell them in exchange for money in order to grow the business. So a stock market is just where these tiny little parts of the business, so to speak, are traded. Okay, so that's what a stock market is. So what I want you to do now is there are several factors that affect the price of shares in the stock market. So have a read through this, fill in the gaps, see if you can fill in with either higher or lower or what you think needs to be in the respective gaps. Okay, we'll go through this. I'll put up a separate document later with the answers in. Okay, so have a work through that, take you a few minutes. And then just the final part of these stock markets are just two terms, bull market and bear market. Okay, so a bull market it sounds kind of cheesy, but a bull kind of attacks upwards, kind of lifts its horns up. I didn't make this up, so I know it's a bit silly, but a bull market, a bull kind of attacks and goes up. So a bull market is just a fast-growing market. Okay, so in the last few months, the market has been in a bull market. The market has been accelerating quickly. Share prices have been going up rapidly. So a bull market is when the stock market is buoyant and share prices are increasing rapidly. A bear market, which represents, again, I know it's a bit cheesy, but a bear swiping down with their paw, that's how they attack, is a downward slope. So a bear market is when the market is shrinking. Okay, so the Hong Kong stock market, since the coronavirus outbreak, has been turned into a sort of a short-term bear market because share prices have been dipping due to the uncertainty and recession that the Hong Kong economy has found itself in since the protests and now the virus outbreak. Okay, so basically a bull market is a positive growing stock market, and a bear market is when the market is shrinking and reducing. Okay, so that's about it for today. Quite a short lesson just on stock markets. So a stock market is just where the shares of public limited companies are exchanged. And then I'll put up the answers to this fill in the gaps bit in a second. Okay, hopefully that's nice and clear. Any problems, drop a comment or send me an email, but should be relatively straightforward. Some of you might have already known that anyway. Okay,